It's the last business day for the week. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the program today, starting up shares plunge again after Moody's cut its debt. Old Mutual Unit picks banks for $3.35 billion flotation. Plus, Zimbabwe pledges to curb spending and re-engage global lenders. Let's get started now with the markets. And here in Africa, the market in South Africa rebounded after 3 consecutive days of fall this week at intraday. Now, the JSE index was up 0.02%. The NSE remains in the green, though at a slower pace. The index was up 0.14% at intraday. Egypt is closed for the weekend, and Kenya traded up 0.84% on Thursday. In the Middle East, the market there were sluggish on Thursday, but Saudi Arabia's index rebounded from technical support in its heaviest trading volume since June. The Saudi index rose 0.85% to 7,086 points, bouncing from near strong support around 7,000 points, where the peaks in late October and November roughly coincided with a 200-day average, now at 7,015 points. In Dubai, the index edged down 0.03%. Emma Properties rebounded 2%, but its unit Emma Development continued to slide, falling 3.8% to a record low of 5.34 dirhams, compared to last month's initial public offer price of 6.03 dirhams. Qatar's index dropped 0.31% after sinking 1.5% on Wednesday. Real estate firm Edston Holding, which had been rebounding strongly in recent days, fell back 7.8%. The Qatari market surged early this week on hopes for progress in resolving Qatar's diplomatic dispute with 4 other Arab states. But those hopes were dashed when Saudi Arabia, the United Arab Emirates and Bahrain, in an apparent snub of Qatar, did not send their heads of state to this week's regional summit in Kuwait. And looking at Abu Dhabi there, it was down 0.79%. In Europe, markets were higher on Friday morning as investors reacted to progress in Brexit negotiations and a long-sought deal regarding global banking regulations. Let's get details from Conrad Busen. Good afternoon, Conrad. Good to have you again. Thank God it's Friday.
Thank God it's Friday. Good afternoon, Timmy, and hello to everyone in Nigeria.
Right. The UK and European Union have finally agreed on 3 particular issues that had dragged the negotiations, paving the way for the next phase of discussions. How much of good news are there for investors in this agreement?
You know, Timmy, the most important piece of news is that this deal happened after all. It took so long, this phase 1 part of the Brexit negotiations. And now, finally, the 2 sides can head towards the phase 2 negotiations, the very, very important negotiations about the future trade relations between the United Kingdom and the European Union. But I can tell you, if you talk to people here on the trading floors, and if you ask them about what they expect, you don't look into many very optimistic faces, because it's quite clear that phase 2, the negotiations about trade, will be much more difficult and tedious than the ones that we've seen during phase 1. Remember how long it took the European Union and Canada to forge out a trade deal. And this trade deal with the Canadians wasn't even about the services sector, but services, especially financial services, the banks, their passport rights to continue to do business here on the European continent. This will be part of those phase 2 negotiations, and this will be very, very important for the Brits, as services are such an important part of their economy. Still, of course, it is a positive piece of news from Brussels and London, and of course it's giving some momentum to the market here. Look at what the German DAX is doing today. It's nicely on the upside.
Well, we'll watch out for the second phase of that negotiations. But interestingly, looking at the DAX behind you, it seems to be tilting downwards. However, talking about agreements in the banking world, the last piece of Basel III puzzle has been knocked together What are the essentials of this overarching industry regulation, and is it a key driver for the bank shares today?
Yes, it is. The bank shares, Deutsche Bank, Commerzbank here in Frankfurt are great gainers. And if you look all over Europe, the financial sector, the banks are really very much in demand with, for example, Lloyds Bank up 3.5%, HSBC up 3%. Société Générale, the French bank, is gaining 4.5% because, well, generally speaking, those Basel III rules are about how much capital a bank needs in relation to a loan, to the loans that it gives out. And the agreement found there now for those new Basel III rules looks like it's going to be a bit more generous than what most of the banks had been feared. To be more precise, the question is, and the most important part of this regulation, which became now communicated yesterday, was how much capital the banks need to provide and according to which models those capital buffers are calculated. Will the banks be allowed to use, at least in parts, their own internal models of calculation and risk evaluation, or will the supervisors dictate what models to use? Now, the banks, the large banks especially, were allowed to use their own models in parts, and that is very positive for them. Of course, there are always a few exceptions. Banks that hold a lot of mortgages, for example, in their books, European banks mostly, they say they are at a disadvantage compared to the Americans. And also, you know, we have a bit of a fragmented banking sector here in Germany. Some of our banks, they are very much public law banks. They are owned, at least in parts, by local governments. And they do not have those very sophisticated risk evaluation models, which means they are going to be treated according to the models by the supervisors, and that's not so good for them.